What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but this charting and trading method, you can use it with any company that's traded on the public U.S. stock market. Make sure you hit that subscribe button and the notification bell. Sometimes we release bonus content, so you want to be notified when that gets released. The bonus content is a little different than the nightly and weekend videos, because the nightly and weekend videos focus strictly on identifying the triggers and targets for trades ranging from scalps and intraday trades for the next day into long-term swings and leaps as well. So if you want to deeper dive into how we set up the charts and our trading levels and the different colors that we use for the different levels, make sure to check out our bonus content on our YouTube page. And for more information about the strat itself, you can check out the description of this video. That is what our trading and charting method is based in, layered on top with a couple of different nuances that we've developed over the years. So if you want to look at that, make sure you check out the bonus content. Let's go ahead and take a look at the agenda for today's video. We'll go ahead and recap Friday's price action. Then we'll do a zoom out and look at the week, month, quarter, and year. And then we'll zoom back in and look at the market makers' expected move for the week, and then set our 4-hour markers and triggers and targets for Monday in the coming week. And we'll do a quick review of the triggers and targets for the month, quarter, and year. We had a pretty big move on Friday, so it did kind of take some of the strats out of, they're no longer in force, so we'll go ahead and go over those. Just looking at the chart, I'm going to start out with, we're going to start with the scalping, how we start every day. And I don't have the full move of the day on because it was such a big move, and we want to talk about the 4-hour markers first. So we do have the overnight high and previous high day right here around this 42.87 level. The overnight low was 41.66, and the previous low of day was down here around 41 flat. We have the honorable mentions here of the market makers' expected move high right here of 42.22. That was the expected high for the week. The market makers' expected move high for Friday itself was 44.46, and the market makers' expected move low for Friday was 39.88. So we had the big move on Friday, and the question is, was it Trump announcing the tariffs, or was it the chart actually showing us before that happened, right? And it can be kind of tricky because we've got the 5-minute here. We have the opening print right here. We have a little bit of a push up, but then it pushes back down. We come down, we make a higher low comparative to this this low right here from Thursday, and we go up and we make a lower high. So here, when the lower high is locked in, when price came down and wicked down below the low of this 3, you could have entered puts, right? It's a lower high underneath opening print, right? If you're not familiar with this channel, the general rules are we look for lower highs underneath opening print to get into puts, and we look for higher lows above opening print to get into calls, especially at the beginning of the day, right? This is more of a scalping perspective. So we did get the lower high and the lower low, but it then got violated, and you would have been stopped out here, right? And you would have got a higher high, and you'd come back, been pushed back down here and got the lower high. So the chart was telling us, and it wasn't, this was around 9:45, and it wasn't until 9:55 that the announcement was actually made. So we had entered puts here, right? We got the lower high underneath opening print, and we entered puts here once we violated that low, and then all of a sudden the bottom fell out. Now, if you weren't on the 5-minute, the 15-minute gave this to you as well, right? Let's just get this on here. So if we're looking at the 15-minute, spread this out so that we've got the chart. Right, here was opening print. We had the wick up, push down. We actually made a lower low from the 15-minute perspective, came up, made a lower high underneath opening print, and you could have waited till here, right? Got in. Wasn't a whole lot of time to get in once it was dropping. If we go back to the 5-minute, If you missed the original entry, there was another entry, but it wasn't like a traditional lower high, right? So here we go. So on the 5 minute, right? So we have the lower high, and then the entry below this low, right? So we enter here, you got the flush down, hit this 200 fib extension, which was previous low a day, and it continued to flush. Then we had this little bear flag on the 1 minute. So it wasn't, there wasn't, and it didn't give you a higher low on the 5 minute. You would have to been down here on like the 1 minute chart. But this little bear flag, we actually entered a couple more puts, and yeah, the bottom fell out again. So fell out, filled this gap, looked like it was going to be gap fill reversal, pushed back out, but then made a lower high, pushed down. We did make a higher low, but it was followed by a lower high, lower high. So you want to, if you got out with the gap fill, here was another opportunity to get in. Push back down, looked like it was going to, that was the bottom, right? We hit last week's 50% line, this dashed purple line. We hit the October 7th, 2nd gap and go initiation level, right? So this could have been a very easily a bounce point, but it did reject once again. We pushed down, found last quarter's high, 35.49, and believe it or not, we pushed all the way back down to the market maker's expected low for the week. So in 1 day's movement, we went from market maker's expected move high all the way to market maker's move expected low, and that's for the week, right? So we did a whole full week's move in a day. So a pretty big drop, right? Let's go ahead and look at it from the day perspective. Done looking at it from the scalping perspective. Let's look at it from the day perspective, and we can see we pushed down. Did I give us yeah, 2 days. I removed the gap so you can't see it there. Sorry about that, but you can see on the day we have this 11-week range, breakout level, intraday test of the breakout level. So we popped above, the top of the range, popped above intraday, retested that level, and we took off. Well, here was another, base for a push up, right? And that's what we've done is come back and retested it, right? It was never retested. Not even from an intraday perspective, really. This one at least was kind of tested from an intraday perspective with this 3. But again, I've been talking about it for a week that, we could have the gap fill here. There's still another gap right here. And we haven't tested the base of the breakout from a daily perspective or a weekly perspective, right? Intraday is fine from a short-term trading perspective. But when we're talking about swings and whatnot, this is the level we're looking at for a good bounce. So we could get a bounce here. We took out a lot of stuff on the way down, and depending on what happens over the weekend with all these tariff announcements and all that stuff, we could find ourselves way back up here at the start of the week. But from a week perspective, this set up a possible 2 up, 2 down for next week, right? So we've got a big failed 2 here, big failed 2 up, right? So we went 2 up, meaning we went higher than last week's high. But it's failed because we're no longer not even above last week's high. We're almost at last week's low. So big failed 2 up, could set up the failed 2 up, 2 down. Now the initial magnitude for that move would be the 2 to the left of the failed 2 up, which is not a lot of magnitude. But we've got I don't want to say thin structure, but we haven't retested this level that we've pushed up through. So again, to see push down, we could flip the month and the quarter red very easily. 34.17, we're closed 4 cents away from flipping those red. So we could flip those red and come back and test this year flip, 28.13. That was the top of the resistance. That was the resistance level for that 11-week range. So very reasonable to think that we could come all the way back to this level and even push below this 28.13 level, because if we remember, there is still a gap right here as well. So we could get this gap fill for just a little poke through, flip everything full-time frame continuity to the red side, which is a total reverse of what we've been in, right? We've been in the week, month, quarter, and year have all been green for the last few weeks. So if that flips those red and we flip this red, it could entice some bears to, look at a bigger pullback. But I also think that this would be a great bounce point, right? This was previous resistance for 11 weeks. resistance turns into support and uptrends. So that could be a great bounce point. Again, from the week perspective, we've taken out all these highs that we've been trying to take out, and we were just aiming for the higher targets at this point. There was no more strat reversals from a week perspective that we were in, but from the month perspective, we were looking pretty healthy, and you can see how that's pulled back so far already, and we've got a big wick. So could we be setting up a failed two up, two down for next month? Failed two up, two down, possibly targeting the low of last month, or even the low of this gap close here below last year's low. Could that push us back into a bigger pullback? Possibly. We've been talking about for about a month and a half now how September, October are traditionally, historically, the worst performing months for tech. So we hadn't seen that weakness all the way through September. We hadn't seen it through October so far, but is this the beginning of that? October is known for its volatility as well. So even if we don't get the full pullback, do we just continue to get volatility through the rest of the month? That's very high possibility. So from the month perspective, we want to continue to look at how this month is going to finish out. Now we're still at the beginning half of the month, but we're about halfway through. So could that push up at the beginning of the month? Could have been just to create the wick for an inverted hammer that we're going to form ultimately on the month? Quite possibly, right? The wick has to be formed sometime. So we got to keep that in mind. From the quarter perspective, we've been taken out of the one combo two down, combo two up. We're still in the strat's still triggered, but we're no longer in force, right? That was in force if we stayed above that 36.15 level, that magic 36.15. We're back below it, so it's no longer in force. It has triggered, and like we said, just because it triggered doesn't mean it was going to reach the strat by the end of the quarter or even by the end of next quarter. That's a long ways to go. 70.08 is the magnitude for that move, so we've still got to make it through last year's 50%. We do have a couple gaps to the upside that could act as magnets, but we've got this monthly broadening formation here to contend with before we get up to those levels. So from the quarter perspective, we want to continue to monitor this, make sure this doesn't turn into an inverted hammer. If it does, then we run the risk of this being a lower high on the quarter perspective and us going two up, two down next quarter, which could trigger a much bigger push down, right? If we haven't already filled these gaps, we do have further gaps to the downside that we can fill as well. And again, that would be a lower high on the quarter perspective, coming after a higher high, but we already made a lower low as well. So we went lower low. If we go lower high, does that put us in a downtrend? Does it start us in a downtrend? Let's go to the year. And we can see, we have turned things around pretty well this year, right? Because we did trigger the 1, 2 up, 2 down, but it didn't reach magnitude, right? The magnitude was the 621. We reached 723 back in April. So from a low perspective, it is a higher low. If we continue to keep this the year pushing to the end of the year and get the 2 up next year to lock this in as a higher low, that could be a higher low. But you can see that wick that's formed. We're pulling back again. That year flip was big time resistance for us for a long time. So will it act as support for us? Hopefully. And then hopefully it doesn't just turn into like a doji for that we close for the end of the quarter. Hopefully we were able to push back up, hammer back up. Definitely want to take some of that upper wick away, and really be in a good position to go 2 down, 2 up next year, and really target that 70.08. So that's our zoomed out view. Let's go ahead and look at the market maker's expected move for the week. So I am using Thinkorswim, and the way that we get the market maker's expected move is by going to this options chain. They still have last week's on there for whatever reason, but if we look at the options chain for October 17th, we look over here, there is a plus or minus 5.405. What that is the market makers expect that there will be a plus or minus $5.41, we'll call it, move for the week. All right, so let's flip over to our notes real quick. And we can see for Monday, October 13th, the week of 10/17, we do have this expected move here, right? So the $5.41 move with a close of 34.21, add 541 to that, that's 39.62. Subtract 541 from that, and you got 28.80. So we've got an expected range of price for SOXL next week between 39.62 and 28.80. All right, we've already gone out here to the chart and put it out there. So let's just look at our 4-hour markers and our triggers and targets for Monday. We'll get into the triggers and targets for the week and continue to go from there. Oh, oops, there we go. So we have our market makers expected move high up here at 39.62, which is pretty crazy because the previous high of day is 42.83, I believe. So the previous high of the day was 42.83. Market makers expected move high is 39.62, and the market makers expected move low is 28.80. So what that means is market makers expect the price to probably continue to move down. All right, we've still got this sliver of a gap down here. You can see in the overnight that it's almost already been filled. Of course, overnight gap fills don't count, but we've got continued gaps going down as well. We do have, just talking about the 4-hour markers again, we've got our previous high of day up here, we've got our overnight high here, and we've got the previous low of day here, overnight low here. So those are the 4-hour markers. Let's just say we do get a push up over the weekend, right? Say the news gets better over the weekend, and we open up here, right? 37.23. From a scalping perspective, it's what we talked about earlier. We're just looking for lower highs below opening print to enter puts. We're looking for higher lows above opening print to get into calls. So if we open here and we push up, maybe reject off of last week's 50% line, this 38.77, and push back down, maybe we get a bounce off of the opening print, or a higher low above opening print, we want to go ahead and enter calls. Now there's a lot of resistance that will be above from the drop that we had, but any higher lows above opening print, we want to get into calls. Conversely, if we open here and we push down, maybe get a bounce off of last month's high and push back up, but then ultimately get a lower high underneath the opening print, then we want to enter puts, and same type of thing. The targets, of course, are previous low day and overnight low to the downside, and previous high day and overnight high to the upside. Again, if we open up here, then we're probably going to be opening at the highs from overnight highs. So overnight high would probably be out of the picture, and we're just looking for previous high of day. Past the scalping, if we look at the more intraday, full day trade, overnight swing trades. Let's bring this into play here. We can see from the 4-hour perspective, we did get a 3-2 down. So there is a possibility that if news is good over the weekend and we open up positively, we trigger the 3-2 down, 2 up. Now from a strat perspective, that targets the high of the 3, which is 42.84. But again, we've got some things we got to work through. Market makers expected move high at the very least. We've talked about before, market makers expected move high and low levels don't stop price, right? They're not the end all be all, but they are points of inflection. You can see how it's around the base of this these fib extensions, or the base of this push up is basically where the market makers expected move high is. That's also kind of around last week's 50%, and we know that a lot of times the 50% will be tested. If it's tested from the bottom, a lot of time the rejection just points to further downside action, and if we're coming in from the top side and we get a bounce, that usually means further upside. So we want to look for any type of rejection around this level. There's also this weekly broadening formation coming in through here that could also act as resistance as well. So we've got a lot to work with. But if we get through this mid level of this candle, then I think there's a good chance that we could finish out that strat. Maybe not fully, because we do have this 4-hour downtrend. If we are able to fully finish the strat, it should poke above this 4-hour downtrend level. But again, we've still got more work to do. Last week's high, this 61.8 fib extension, this weekly broadening formation, there's still a lot of resistance that we've got up here. We are at what some consider could be the top of the move, right? Here was this 11-week range, the breakout. We've had a big, strong move up through daily and weekly broadening formations, or up to daily and weekly broadening formations. So, it's not unreasonable to expect this pullback that's going on here. We are at the base of this particular move, so it's more than reasonable to expect a little bit of a bounce here too as well, even if we are going to continue the downtrend, right? Triggered 3, 2 down, 2 up, we make a lower high, and then we're continuing down to the downside, trying to fill these gaps, right? Let's go to the day chart. So maybe you want to do an overnight swing or something like that, or even just an intraday trade. We've got the 1, 2 down. So if by chance we're able to push all the way back up through this, or if overnight or over the weekend things get better and we, price gets back up here, we up and up here, there's the possibility of the 1, 2 down, 2 up strat. Now there's not a lot of magnitude here. It would finish right here, and we've got this 100 fib extension of the April 25th low to July 25th high and pullback. That little bull flag that we had there, that 100% fib extension is up here at 43.80 as well. So again, more resistance, daily broadening formations, weekly broadening formations, last year's 50%. We've got a lot to work through. So from the day perspective, we've broken the soft higher low, right? This was a soft higher low, but this is the main higher low that we would want to stay above in order to keep a daily uptrend. So we're really close. Any more push down, and we've got a lower low on the day perspective. So it is coming from a higher high, so it would just be creating a broadening formation. But at the same time, we're already in this broadening formation right here. This orange line right here is the daily broadening formation. So is it just respecting that daily broadening formation, or is it going to start, a new one even within that broadening formation, right? So say price only got to, let's get the right thing here. Say we dip down to here and bounce. That would give us, a daily broadening formation here, and we've got another broadening formation within this broadening formation. That's quite the possibility. But I don't, I particularly think that we're probably going to come through and bounce off that daily broadening formation, right? Like I said, we haven't tested this breakout level from a daily or weekly perspective. It was just intraday that, we had the retest and bounce. So most breakout points have a retest level, and that will tell you if you're going to continue to bounce, or if you're going to get a continued push up or not. If you get a bounce at that breakout level, then more than likely you should get that continued push. If not, then we're going to see more downside action. We've got plenty of gaps to the downside that we can go fill. All right. So again, market makers expected move low is down here. Good probability that we could come down and bounce off of this level. Let's go ahead and go to our notes so we can look at the actual numbers here, right? So we talked about the scalping, lower highs below opening print, getting into puts, higher lows above opening print, we're getting into calls. But from the day trade, overnight swing perspective, 4 hour, if we do get action to the downside, it's a 2 down continuation, triggering at 34.17 with targets of 33.64 and 33.18. If we do get that push to the upside and we trigger the 4 hour reversal, that's a 3, 2 down, 2 up, triggering at 37.61, targeting 38.23, 39.26, and 40.53 as intermediate targets on the way up to the ultimate target of 42.84. Right, that's a big move. And although we made that big move on Friday, it was off of a pretty big catalyst, right? I don't know if that will have the same type of catalyst on Monday to propel us $5 in the upward direction. So if we don't have that bigger catalyst and it's just the grind back up, these will be our targets on the way up to the ultimate magnitude for that move. From the day perspective, if we go to the downside, we would have a 2 down continuation again, triggering at 34.17. This time targeting 33.18 first, 32.44, 31.36, and ultimately 31.25, which is the gap close. If we reverse to the upside, again, we talked about it would be a 1, 2 down, 2 up reversal, triggering at 42.84. Not a very big magnitude. Magnitude's only 42.94, but we have our extended targets of 43.37, 43.80, and 44.24. All right. We looked at the week, month, and quarter chart already, so I won't drag this out any further and let everybody get to their weekend. If you're watching this Saturday morning or Sunday night, let you get to getting ready for the week. Whenever you're watching them, don't want to drag this out too long. Anyway, for the week of October 17th, if we get action to the downside, that is a 2 up, 2 down reversal with triggering at 34.17 with a magnitude of 33.57. So not the biggest magnitude in the world, but we've got some extended targets here of 33.18, 31.25, which again, remember, is a gap close, and then 30.68. Now, if we get a push back to the upside and we trigger to the upside, bulls will rejoice, but it'll just be a continuation. It won't even be a reversal. So we'll have a clear entry at 43.37, but no clear magnitude for the move. We would just have our extended targets of 43.80, 45.67, and 46.79. All right, now the month, we triggered the 2 up at 35.49, but as you can see, we're back at 34.21, so we're no longer in force. So this isn't bold. If it was bold, we would be in force, right? Meaning we were above that level. We did take out one target, but very close to taking out a second target, but didn't quite make it. So I think 43.74 was the high of last week. So again, from the month, we triggered the 2 up. We want to get back in force, meaning we want to get back above 35.49 and continue to reaching for these extended targets. Now, if the month happens to go red 3, right? If price goes all the way down to 23.80, that makes the month a red 3 or a bearish engulfing candle. At that point, we would have some extended targets of 22.57, 21.09, and so on. Hopefully we don't get to that point, but if we do, we're ready, right? We got triggers and targets. So moving on to the quarter, we triggered and fulfilled the 2 down combo 2 up strat, right? 35.49 to 36.15. That was that strat. And then it triggered the 1 combo 2 down, combo 2 up at 36.15. But again, 34.21 is our current price. So we're back below 36.15. So the 1 combo 2 down, 2 up was triggered. That's why we have it underlined, but it's no longer in force. So it's no longer bold. So want to get back above that 36.15. That re-triggers the 1 combo 2 down, combo 2 up, and we can continue to go and shoot for these extended targets with the ultimate target of 70.08. And on the year, we've talked about how we triggered the 1 2 up, 2 down. Didn't reach magnitude of 621, but reached that 723 level, hopefully putting in the higher low. But technically, this has still triggered, right? So it's no longer in force, but we've got to watch out that it doesn't go back in force, right? If it does at that 2350 level, then we're looking at the possible 621 and actually reaching that strat there. Where we thought we bounced from that 723 level back in April. So I don't know that we would go back down that far. We would take it as it goes. We've got plenty of triggers and targets on the way down for this to re-trigger. So don't want to concentrate so much on the year from the downside perspective. I would look at the year more of we've reversed things around from how we started out, and we just want to remain in that green hammer for the year. But there you have it for the weekend video, your triggers and targets for Monday, the week, and the review of the triggers and targets for the month, quarter, and year. I hope everybody enjoyed this video. If you did, please give it a thumbs up. It really helps the channel grow. Again, we're not selling anything here. We're just trying to give the most information that we can and try and help as many people as we can get on track for consistent trading and ease of trading, right? Trading is never going to be easy, but you want to make it as easy as possible, right? And I believe that, especially with using the strat, a very simple way of looking at price action, candles either a 1, 2, or 3, and then you've got your 6 main reversals off of that. It kind of makes it pretty simple, right, to trade, right? And you just need to have confidence in your levels and see them through. Make good entries so that you're not risking too much. Your risk reward is how you like it, and just use the advantages that SOXL provides you with the very low premium when you compare the high delta to low theta that you're getting, and the high beta on the underlying stock alone, right? When you compare that to other stocks out there, I think SOXL is very beneficial. But at the same time, you can use the same strategy with any ticker symbol. So again, give this video a thumbs up if you liked it. Help spread the word, and we'll continue putting these out. So depending on when you're watching this, I hope you enjoy your weekend, or I hope you have enjoyed your weekend. Make sure that you get some good rest on a Sunday night. That way you can wake up refreshed on Monday and be ready for another great week of trading, right? And I look forward to seeing you out there.